Instagram,
All right. Good morning, everybody. Welcome to Early Morning Crypto Talk. Bitcoin Brandon from Los Angeles, California. World crypto education news for today. Go ahead and type in the chat box where you are listening in from. I said we have Bethany Gibbs on from Seattle, Tracy Kubich, Lashana from Richmond, Lance Hunt from Dayton, Ohio, Anthony Pinkston, Jenna Jones, Shauna Ross, Abdul Wiles, Nicholas from Sweden. Now, as a disclaimer, I am not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed, intelligent decision on which direction you want to move into. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money that you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make that happen? Pick a vehicle, take action, and remain focused. Do not get distracted. There's so many things out there that can distract you in this space. Remember, you have limited resources. You cannot be a part of everything. Now, this is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. So make sure you hit that thumbs up button on the YouTube channel. Let me go ahead and hit screen share. And turn on my Bluetooth. All right. You should be able to see my screen. Hope everybody has had a good week so far. I know we're halfway through the week, getting close to Christmas time, coming up very quickly. Good morning, Mr. Stewart. Lorna Vasquez. All right, this one I find interesting because I've been saying this since last year. How has the Bitcoin futures products affected cryptocurrency markets in 2018? I think it's affected it very big time, that they have been the ones manipulating the market. All the way down to the $6,000 region. Then it dropped to the $3,000 region after Bitcoin Cash forked and they having their own little war with each other. So let's see what this has to say. It has been a year since the start of CBOE's XBT futures contracts and CME Group's Bitcoin derivatives products launched last December. With super bearish prices these past few months, a lot has changed since the cryptocurrency economy touched all-time highs on spot markets. Meanwhile, Bitcoin futures contracts have been growing, and some skeptics still believe these derivatives products are disruptive toward cryptocurrency spot prices. A few weeks before the launch of CBOE and CME Group's Bitcoin-based futures contracts, the price of Bitcoin Core spiked significantly. After CBOE's launch 7 days later, the cryptocurrency touched an all-time high of $19,600 per coin, and the value has been depleting ever since. On the opposite side of the spectrum, as the price of BTC went down on many occasions, Bitcoin derivatives volumes on both CME and CBOE skyrocketed. Skyrocketed. That means retail investors have been selling off because the futures have been betting against the price of Bitcoin. And I'm probably going to cover this, may not happen till tomorrow, or depending on what we do tonight, me and Jairus, but I saw, no, not there. Koshi Times, this is what I saw. It just popped up right when I was getting this set up. Volume shows institutions buying BTC. Didn't I say that they've been hoarding Bitcoin? They've been hoarding it, buying it at the cheapest levels possible. And they're going to ride the wave when it comes all the way back up. So, shows here. Even though the price of Bitcoin's gone down, the derivatives volumes on both CME and CBO have skyrocketed. A recent CME liquidity report for December 7th shows Bitcoin futures volumes rallied in November, just before the price was about to experience some heavy losses. The same can be said for the month of October, as CME's BTC futures contract saw significant average daily volume growth. CBOE's daily volume showed the exact same pattern throughout all the false bull traps and subsequent dumps all year long. Skeptics think and have believed that futures markets have caused a long-term crypto downturn, and think futures actually set the price of BTC. Many believe that when precious metals derivatives products were first introduced, they defined and suppressed the price of PMs like gold and silver. Bitcoiners will also remember that CME Chairman Emeritus Leo Melamed told Reuters last year that futures markets would tame BTC. We will regulate, make Bitcoin not wild nor wilder. We'll tame it into a regular type instrument of trade with rules, said the senior figure at CME Group. Playing spot markets with leveraged shorts. The bearish market that followed the launch of Bitcoin futures markets has caused people to wonder if derivatives players are manipulating spot prices. Large players like state actors and financial institutions could purchase BTC through the wide range of spot exchanges and follow up with this action by placing leveraged short positions in CBOE and CME contracts. Just like the Chinese miners who have said they are shorting BTC right now, futures traders who buy from spot exchanges can slowly dump these coins back on the market, and they are protected by hedging in futures positions. You see that? That's the market manipulation. Even though they dump these coins slowly back in the market, they're protected by hedging in futures positions. The same type of manipulation happened years ago with precious metals markets, and there's now an overwhelming amount of paper gold products being swapped compared to physical assets. This week, both CME and CBOE markets are processing roughly around 3,500 to 7,000 ADV contracts and have seen more sizable ADVs on certain days prior to a market shift. See that right there? I haven't learned how to look at the futures market, but I can see a pattern here. If you're able to read the futures market and you see all of a sudden high volume taking place, and then shortly after that happens, the market drops. So look at that. It said, coincidentally, CBOE's XBT futures volume that same day matched CME Group. Interesting enough, the BTC spot price dropped from $4,670 per coin to $3,600 over the course of 5 days that followed CME Group's Bitcoin derivatives contract spike. Furthermore, Bitcoin futures predictions have changed considerably since December 2017, when people were still betting in the $20,000 to $50,000 range. Instead, contracts today for December, January, and February are between $3,200 and $3,500, making the Block Tower Capital and Ari Paul's BTC wager look passé. In fact, the Ledger X contract that wagered BTC's price would touch 50K by December 28th was sold for a quick premium that day. Ledger X president Judika Chow said the options sale made about 25% premium above the spot price at the time. It is still too early to tell if Bitcoin futures products are affecting spot prices in a negative way. But skeptics have claimed markets like these are not beneficial to cryptocurrency since they were announced. In addition to CBOE and CME Bitcoin derivatives, other giant financial institutions are joining in on the fun. The vice president of NASDAQ media team, joining in on whose fun? Whose fun? It ain't our fun. It's the institution's fun. The vice president of NASDAQ media team, Joseph Christinat, told the press that NASDAQ will launch its own Bitcoin-based futures in the first half of 2019. Then, the Intercontinental Exchange revealed that BAC would be launching its derivatives Bitcoin products on December 12th, but delayed the launch. Now BAC is hoping it will start selling products on this January 24th, and the institution's contracts will be different than CBOE and CME futures. BAC plans to exchange its products in USD, but according to reports, each trade will result in physically delivered Bitcoin. That's a twist. So here's an article that is backing up what I've been saying. Bitcoin, first of all, and crypto is not going anywhere, regardless of the price. And the price is where it is because of market manipulation by the boys who know what they're doing. They came into the space. The only thing that is not known is when they will release the brakes. I think that'll happen sometime in 2019 when they're confident that the infrastructure is in place. And they're confident that most of the retail people are out of the space and enter the institutional investors, hoarding up all the coins. They can do this. Why? Because they know that most people, especially the retail investors, are not educated when it comes to investing. They don't understand Bitcoin. They don't understand crypto. All they know is, well, it's like a lottery ticket. It's like Vegas. If I buy it now, it's always going to go up later. And those are the people that when things do not go their way, will scream bloody murder and sell quickly. Who's buying it? That's always a question you got to ask. If you're selling your coins, somebody's buying them. Who and why? This article and then the one I'm going to cover probably tomorrow, this one here, is telling you who's buying. The institutions are. The wealthy people are buying them up. They're hoarding your coins. All right, so that was a good article. Let's go to, how do cryptocurrency prices even work? Have you ever asked that question? How do crypto prices work? That's a good question, JB. What percentage of retail investors are still in? I don't know. This one here, okay. If you've spent any time with cryptocurrencies and you know how volatile their prices can be, which begs the question, how do these types of digital currencies compare with traditional currencies, especially considering neither one is backed by gold or anything else of value? The easiest difference to spot between the two currencies is that traditional currencies have the backing of centralized governments. These governments declare their currencies as legal tender. Fiat currency value is derived from the central government stating that it does. This means all who own the currency put their trust in it. This is the case for most countries throughout the world today. Central banks control the supply of money, monetary reserves, and indirectly the rate of inflation. On the other hand, cryptocurrencies do not fall under the umbrella of a central authority or government. Many regions do not recognize or accept them as legal tender. Additionally, cryptocurrencies typically have their supply fixed, which means the devaluation of digital currencies by means of inflation is essentially non-existent. If there's anything, if people start asking you questions about Bitcoin, and if you really want to put a point, you don't want to say, well, it's a decentralized peer-to-peer transaction between a digital coin that is not physical or anywhere around the world. One good way to explain is say that since Bitcoin has a fixed amount of supply, unlike your money, it can never go through inflation. And based on supply and demand, the value of it will continue to go up instead of going down. If anything about Bitcoin you need to memorize, it's that. So when you hear, as we go into Christmas season and you're with family and they say that Bitcoin's not real and Bitcoin's going to go to zero and this and that, all you have to say is, what is the value of your $100 bill today as opposed to 20 years ago? What is the value of Bitcoin today as opposed to 10 years ago when it first got started? It went from zero and is now at 3,500. Oh, we forgot to look at the market chart. I'll look at that right after this. The two currencies share a few similarities as well. Both have a relative store of value and both can be used as a method of purchasing services and products. So why do cryptocurrency prices fluctuate so much? One of the primary reasons that cryptocurrency prices move so much is due to how new the market is. Beyond knowing the terms blockchain and cryptocurrency, most people are still unfamiliar with this area of finance. Nascent markets have certain qualities which make them volatile. Let's take a look at a few of them. Lack of liquidity. Compared to a traditional established market, the cryptocurrency market does not offer as much liquidity. The difference in total market cap between fiat currency and cryptocurrency is over $89 trillion. That's a difference of 36,000%. Daily trading volumes, cryptocurrency daily trading volumes hovered at around $14 billion. Traditional markets, on the other hand, are around $5 trillion. Then market. Market changes quickly, which means an increase in the volatility of digital currencies should be expected. Yep. New adapters. There are a large number of new users joining the cryptocurrency sector every day. Recent reports show that over 100,000 new adopters were becoming part of the digital currency industry on a daily basis. Many new users have a vested interest into whether specific cryptocurrencies move up or down. This serves to add to the volatile nature of the market and drives up disruption, price manipulation. This has come to prominence with the recent BCH fork. The manipulation of prices can be rife in newer markets. Central exchanges manage the flow of cryptocurrencies, which means they have a lot of incentive to grow their revenues. One way they do this is by artificially manipulating the prices of cryptocurrencies. This is done by controlling the feeds of the prices displayed to get traders to buy or sell certain currencies. This type of behavior and manipulation is only multiplied when you add in the hundreds of thousands of new members in the industry. This nascent users are easily taken advantage of. Additionally, it's difficult to prove that price manipulation has occurred in an unregulated market. You'll also discover that central exchanges have a single failure point. These cryptocurrency exchanges handle a lot of digital currency. If they get hacked, it can have a significant impact on the price of other cryptocurrencies. The number one determinant in the price of cryptocurrency is supply and demand. This is economics 101. If a specific digital currency has a high amount of supply, but no demand from users and traders, then its value is going to drop. It works the other way as well. If the supply of a cryptocurrency is limited and it is highly sought after, then the coin's value will increase. The thinking behind this is connected to the scarcity element. This helps to drive up value and is a key contributor to the reason we saw Bitcoin reach nearly $20,000 this past January. Bitcoin supply is capped at 21 million BTC. This number is fairly low when compared with other cryptocurrencies. As a result, demand for the coin soared. Public sentiment, along with the media, can also play key drivers over the prices of digital currencies. For example, if a specific platform or token gets negative press, you might see the value of that coin take a hit. Not this year. It's been nothing but positive press. This holds all the way up to December 2017. On the other hand, some high-profile coverage and support from the media would almost assuredly cause the price to rise. Not anymore. Therefore, the price of digital currencies is influenced a great deal by hype and human emotion. Not anymore. Of course, there are other factors that determine the price of cryptocurrencies. For example, the usefulness of a token can have an impact on its price. Is it truly solving a problem, or is it just another coin taking up space on the market? Not anymore. That was true. But as I'm about to show you in a moment, none of that matters anymore. Only thing that matters right now is how much volume is coming into the space, because it's being split between all the coins. I'm going to show you in a second what I mean. Lastly, the difficulty of mining a coin might impact its value. If a coin is difficult to mine, then it's more difficult to increase the overall supply of the token. Therefore, the market might see added upward pressure placed on the price if the demand for the coin is high. Not anymore. Cryptocurrency price prediction accuracy. Just like there are no guarantees with traditional markets, the same can be said. Predictions made within the cryptocurrency market. There have been those from both extremes which have attempted to make predictions for 2018 and beyond. Some popular CEOs and pundits have predicted that Bitcoin would rise above the $1 million mark, while others have tried to remain more modest. Still, suggesting that Bitcoin could reach 125,000 by the end of 2022 should be taken with a grain of salt. But we can't have all rainbows and unicorns all the time. On the other side of the market, there are those that predict nothing but doom and gloom. The market will collapse and the price of Bitcoin will come down to less than $100. Some even suggest that it will be worthless before the end of the decade. I highly doubt that. No matter which end of the spectrum you fall under, there are a few things you can keep an eye on that will give you a better understanding of which way the market may move. For instance, if new rules and regulations are imposed on cryptocurrencies that dominate the market, you might see a downward trend. Remember, cryptocurrencies are still less than a decade old. So the market for them will be highly volatile for the time being. There is no way to predict or determine which way the market may move, but there are always indicators that can help you get an idea of what you can expect. Partially true. Right now, the market is being controlled. It is organized control. An organized control drop, and it will be an organized control rise. No matter what, exercise caution when investing in cryptocurrencies. Just because a coin you hold is worth hundreds of thousands today doesn't mean that will be the case tomorrow, which is why you always make sure you get your profit. But let's take a look at the market. I didn't look at it since I started this. Let's hit refresh. Market cap's at 111 billion. I didn't do a crypto talk yesterday, so I think that's around the same as it was 2 days ago. Bitcoin dominance, 54.9%. It was at 55% 2 days ago. Bitcoin price, $34.99. Everything looks in the green. EOS is up 10%. Okay. So to me, this looks pretty flat. Tezos is up 15%. Waves, 23%. Best performers, 24 hours. Insight Chain, Waves, Bitcoin Private, Augur, Tezos. Electroneum is back up 10%. That keeps bouncing around. Up, down, up, down, up, down, up, down. Money's being made on it, though. EOS, 10%. Binance Coin, Aurora, DEX, Raven Coin, Chainlink, Stratus. What about the worst performers? Anything of significance? USD coin, nah. That's a stable coin. True USD, stable coin. Gemini Dollar. Look at all these stable coins out here now. You've got Tether, Gemini Dollar, DAI, Paxos Standard, True USD, USD Coin, Stasis Euro. That's for the European market, euros. There's a bunch of them out now. All right. Last article up got my attention. I'm telling you what's coming in 2019. Samsung files for cryptocurrency trademarks in the EU for smartphones. Didn't I say? Cell phone wars is coming. And I will be in the middle of it, one way or another. Samsung files for cryptocurrency trademarks. Electronics giant Samsung has filed for 3 blockchain-related trademark requests for smartphones. Based on the descriptions provided by the company, the 3 European trademark requests relate to providing crypto custody services on smartphones, which indicates that Samsung may be planning to make its entry into the blockchain smartphone market following the recent release of HTC's Exodus 1 and Siren Labs' Spinny, both of which also offer crypto custody. Get ready. Get ready. Your heads are about to spin next year. Dutch tech news blog Galaxy Club reports that the 3 requested patents are called Blockchain Key Store, Blockchain Key Box, and Blockchain Core. Names that clearly hint at the direction of the world's largest smartphone maker is taking. The timing of the news again underlies the fact that despite the well-documented woes of the crypto market in 2018, a number of influential businesses like Samsung and HTC believe that cryptocurrencies and blockchain technology will be key growth drivers going forward and are investing accordingly. Samsung betting on crypto. Citing an unnamed source in its report, Galaxy Club claims that Samsung is planning to release more information about its interest in developing a range of smartphones with specialist cryptocurrency and blockchain functionality as part of the company's ongoing mini crypto pivot. In July, CCN reported that Joel Snyder, a senior IT consultant, a contributor to Samsung Insights, published a paper revealing that for the purpose of crypto storage, smartphones offer significant security advantages over laptops and other devices because of the existence of trusted execution environments, which isolates execution from internal memory, making it close to impossible for hackers to steal data such as crypto wallet private keys. In line with this, Samsung may be gambling on the adoption of cryptocurrencies as the next big user evolution that will drive sales of its smartphones. Indeed, the descriptions provided in the trademark request directly allude to its intention to build blockchain-related solutions for mobile devices. For now, it is unknown whether Samsung intends to offer these services on any of its upcoming models, such as the Galaxy S10, which is set to launch soon. No, it's not. The trademark requests bring up a busy year of cryptocurrency-related activities for the South Korean conglomerate, which has not been put off by the difficult year for investors. In September, CCN reported that Samsung signed a deal with Canadian Bitcoin mining company Squire to design and manufacture new ASIC chips for their operations, which would enable them to compete against Bitmain's Antminer series. Okay, I'm going to make a prediction. Enrico, what do you mean? What's going to affect us in the USA? You posted an article about Thompson and Burton. Well, I will pull that up later. That's not on the docket for today. But let me make a prediction here. Samsung, Microsoft, and Apple, and all the other major cell phone companies. I'm not talking about T-Mobile, Sprint, or Verizon yet. Just the phone manufacturers. They are all going to create blockchain phones. Next year, they're going to be doing it in a test. So they've already got the next 2 or 3 years planned for their smartphone series. That's already planned out. So while they're doing that side by side, you're going to start seeing testing of new version of smartphones. That's going to be alternative for people to buy, because nowadays people are starting to buy 2 phones. I just got my second phone this last week. I've been testing out the MCS service, and so far it works better than the phone I got. This little Moto G6 operates faster and smoother than my Samsung Galaxy S8 that's on Verizon. So I've been doing speed tests and checking with it. I haven't spoke about it publicly just yet, but I've been testing it out because I want to make sure when I start talking about this, I know exactly what I'm talking about, and I've got the proof and evidence to back it up. But you're going to see a lot of new companies like PundiX, Seren Labs, MCS. They're all going to be coming out with their own blockchain-based phones, kind of like how you've got Simple Mobile, Cricket, some of the smaller cell phone companies. And then when it starts to get traction, the big companies are going to pay attention, T-Mobile, Sprint, and Verizon. So the first thing you're going to see is blockchain-based phones. The second phase you're going to start seeing is blockchain-based phone providers, meaning T-Mobile, Verizon, and Sprint type stuff. And you're going to see those companies get into this game as well. It's going to happen. It's inevitable. Doesn't matter the price of Bitcoin. You just want to get ready and prepared for it. Let me take a quick glance at this article here. After a flurry of SEC activity in the cryptocurrency space, the network marketing industry is on notice. Thomas Ritter is an associate attorney at Thompson Burton. But you know what's good thing that I like? Do you know who represents KGX? Thompson and Burton, LLC. Thompson and Burton represents us. We don't move a muscle without their say-so. There's nothing that we say that they haven't already cleared. I can't say nothing without their say-so. Everything we're doing, the education had to be cleared through them. They're the reasons why we didn't launch our bot when we first got started. They're also the reason why we're about to launch our bot now. They already gave the say-so on our Forex. They already signed off on our Bitcoin ATMs. They signed off on our green. So when people say, why KGX? And I'm going to be doing another video. Because I did a video why I joined KGX. I'll be doing another one on why you should join KGX. And this is an article. When did this come out? Is there a date on this? I don't see Rigo. I don't see a date on this. I need to know if this is new or old, because Kevin Thompson's been writing on this for over a year now, since 2017. But let me take a quick look. Security SEC is releasing a noteworthy announcement just days before Thanksgiving. It looks like it's probably brand new. I'll do a quick read on it, and I'll save it for later. The SEC released a noteworthy announcement just days before the Thanksgiving holiday with significant implications for the network marketing industry. Regulatory oversight and enforcement of cryptocurrency companies is here and here to stay. I warned MLM companies, consumers alike, of the dangers surrounding cryptocurrencies all the way back in 2015. This did little to deter most people in the MLM space from joining the frenzy in the coming years. From offers of mining rigs to the sale of all different new and original digital coins or tokens, MLMs have repeatedly taken advantage of the cryptocurrency craze and confusion at the expense of widespread consumer harm. Through it all, and with relatively few exceptions, United States regulators took a surprisingly and at times frustratingly reserved approach to the space. However, the SEC's recent actions signal that the days of the Wild Wild West are drawing to a close. This is again why KGX is going to be huge in 2019. In its public statement, the SEC spoke of two recent enforcement actions against companies engaged in token sales. Both Paragon Coin, Inc. Paragon, and Carrier EQ, Inc., DBA, Airfox sold tokens that the SEC deemed unregistered securities. The SEC hit Paragon and Airfox with $250,000 fines. The SEC's enforcement actions against Paragon and Airfox are important for a couple of different reasons. For one, they represent the SEC's increased interest in regulating the cryptocurrency space. The actions also mark the first time the SEC has imposed civil penalties on companies who have raised money by way of unregistered token sales. But most important of all, the cases against Paragon and Airfox provide a clear pathway by which past companies engaged in token sales can remedy previous violations of the law. It's important to add that the SEC's guidance also covered the topic related to broker-dealers. Basically, when an entity facilitates the trading of digital asset securities, the entity needs to be registered with the SEC. And when someone is engaged in the business of effecting transactions in securities for the account of others, they need to be registered as brokers. This would blow a hole in the concept of having trading bots or slave accounts that mirror the trades of other accounts. In both instances, whether a human or an algorithm is facilitating a trade, a broker license is required. Let me give you guys a good hint here. The bot that we're coming out with, why is we able to do it now? Because the people we're using are licensed brokers. You guys get it? I think I just released information I wasn't supposed to have yet. But anyways, I just want to make that point. Why is our bot going to be finally? We've been working on the sucker for 8 months. Forex and the bot, backed by licensed brokers. As chairman of the SEC has clearly stated on numerous occasions, what is in the mind of the consumer at the time of the transaction. If there's an expectation of receiving some sort of a passive return on an investment or a purchase, the SEC has an interest in that sort of activity, period. That's also why I say, when you guys are looking at the mining rigs and you're asking, how much money am I going to make from the mining rig? You're asking the wrong question, and that's illegal in the first place. The right question is, how many coins is my mining rig going to produce? That is the purpose of the mining rig. The mining rig's purpose is not to make you money. The mining rig's purpose is to solve a mathematical algorithm that's helping to build the proof of power blockchain, and the reward for that is green coins. Now, what you do with those tokens after the fact is in your hand. How much money you make after the fact is determined by when you decide to sell or hold, and how much. That is what education, you're able to tell the difference. I hope that makes sense. And this is an article I'm going to hold on to, so I'm probably going to read it tonight or tomorrow. And anyways, that is all that I have for this morning. Hope you guys have a great day. We're coming up close to the halfway mark for December. The month is not over. The year is not over yet. Congratulations to Stephanie Mears for getting her business for free, her product for free. So I will be making a promo video for her today and getting that out. So who's next? With that, you guys have a great day. Bitcoin Brandon out. Bye-bye.